We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Andrew back on Liberty Nation Radio. I remain Mark Angelides, and we're continuing our economics discussion with Andrew Moran. Now, Andrew, we are living in the wake of Jerome Powell's probably final Jackson Hole speech. And I guess the question on everybody's lips here is what's going to happen to the interest rate? And secondly, can people hope for more than a quarter point cut in the near future?
Okay, so the first question is, out of the Jackson Hole retreat, the conclusion was the Powell pivot. Because in his speech, he gave as much clear as answer as he could that interest rates will be coming. It was similar to last year's when he said it's time for policy to adjust. So the Federal Reserve, it's been on hold for rate cutting since January. And heading into the September meeting, according to the CME FedWatch tool or the Atlanta Fed's market probability tracker, overwhelming investors are expecting a 25 basis point interest rate cut. However, heading into that meeting is going to be a barrage of economic data that's going to decide whether to keep on hold or to cut. And that's the August jobs report, and that's the August consumer price index report, and the August producer price index report, perhaps the August import prices data. So these are huge factors that's going to weigh on the FOMC policy meeting decision.
I hate to be a jaded Jenny, as some say, but it seems to me that what's really going to make the difference on the decision is just how Jerome Powell's feeling about Donald Trump. Because, I mean, tell me I'm wrong, Andrew. Because to me, it seems as though the Fed's been playing politics in a very real way and not responding to actual market signals, as it did under Joe Biden. It did respond to clear market signals, and now, not so much, as far as I can tell. Am I wrong?
No, you're absolutely right. I mean, I've argued, I've been in this profession for a very long time, and I've contended for many years that the Federal Reserve is a political institution, no matter what they say of how it's an independent entity devoid of any politics. Because there's just too many coincidences when it comes to the Federal Reserve, particularly in the past year, because the labor market and inflation were not very different from they were in September 2024. Now they say that, it's about tariffs, we want to wait, and we have the luxury to afford to, we can be patient before adjusting monetary policy. But if you're focused entirely on data and you're data dependent, then you're not looking forward to, the possibility that tariffs will raise inflation. And also, the other side of the dual mandate, is maximum employment. Now, if you're worried about the labor market, and it seemed like Jerome Powell was in that Jackson Hole speech, then and you're very well aware of the lag effect of monetary policy, then you would have acted months ago, or at the very least, you would have acted in July, like Governor Christopher Waller and Fed Vice Chair of Supervision Michelle Bowman. They were the dissenting votes at that July meeting, so you would have to cut rates right now. I mean, yes, you would. From an outsider, yes, the economy is growing, labor market remains relatively intact, inflation is not reacting as much as many people had anticipated when it comes to tariffs. But if you're a data dependent institution, then you're not focused on that. You're just focused on what the numbers are showing you, and that's showing you that okay, fine, cut interest rates.
Yeah, it seems he's just holding on for grim death from this, and there's a major impact to that. First, of course, there's the impact on the American people with interest rates, but there's also a bunch of debt refinancing that needs to take place in the U.S. this year, and by having a rate cut in advance of that could save billions and billions of dollars in the federal government, which itself would have, I mean, if there's less debt in the government, less deficit in the government as well, there would certainly be a knock-on effect, wouldn't there? On the very factors that the Fed looks out for. So surely they're risking falling afoul of their two key principles by risking, so this is a convoluted way of doing it, but by risking the increased payback that the government will have Is that have I got this wrong?
Okay, so on paper, you would be correct. You think
Right.
that, okay, the Federal Reserve is going to cut interest rates, therefore the debt servicing costs are going to be lower because the 10-year yield, which is the benchmark Treasury security, that yield is going to decline. However, the exact opposite happened last year from September until January. The Federal Reserve was in rate cutting mode, but what happened? There was a complete divergence between the federal funds rate, which is a key policy rate for borrowing costs, and the 10-year yield. There was a complete divergence. It went like this, and nobody could explain why. There were various reasons, because many factors influence the 10-year yield.
Sure.
You have conditions of the economy, you have inflation, you have fiscal concerns. That was a legitimate fear that many economists had and investors had, especially after Trump's electoral victory, because they're worried that he was going to increase deficit spending. And you have, so of course, you have the long-term national debt challenges. So there are many factors that would weigh on the 10-year Treasury yield. So yeah, cut interest rates now, but will that lead to lower mortgage costs, for example? Because again, the mortgage rate, that the 30-year focus on the 10-year Treasury yield.
Sure.
So it's not concrete that Jerome Powell cuts rates and then therefore interest rates are going to fall across the board. It's just one aspect of it. The 2-year yield, however, that tracks more of the federal funds rate, though that has less of an impact on the broader economy.
So we can realistically expect a quarter point. That's probably on the cards. That's like a 90% probability. Would you say?
Well, yeah, the betting market the futures market does have a 90% chance of that happening, but there's so many wildcards heading into that, specifically the data I just mentioned.
So, what impact would that have on now I'm very specifically thinking between now and next June, July, August, what kind of an impact would that have on the American wallet if we get
a quarter point? Not much. It's what the Fed does after that, because
Sure.
the fear is that, especially among monetary policymakers, that if the Federal Reserve cuts interest rates in September, it doesn't necessarily mean that it will continue the rate cuts because of what happens with the economic data. But however, it depends on who is serving on the Federal Reserve Board, because now you have Stephen Myron, the former head of the Council of Economic Advisors. He's temporarily replacing Adriana Cudler, who resigned recently. And then you have that issue with Lisa Cook and who he's going to appoint. So therefore, if he appoints somebody who's sympathetic to his cause, then right there you have 4 votes supporting rate cuts. And then who he puts in Jerome Powell's place, that person will likely also support interest rate cuts. So, and then you have a couple of, who are flip-flopping on, like Austin Goolsbee. He may support a rate cut, but at the very least, you have 4 or 5 who would support rate cutting after the September policy meeting. Because the market is betting in two rate cuts, and the summary of economic projections also penciling in 2 rate cuts. But it all depends on what the CPI and the PCE and the jobs numbers are showing.
Yeah, cuts tend to come in cycles rather than spikes, I think. So Andrew, final word. How's the economy looking? Scale of 1 to 10. It's not it's a number, not a word.
There's so many factors involved here. Long term, I would say probably 7 or 8, depending on all those investments from foreign and domestic companies are realized. But short term, there are too many headwinds to give it a high number.
Too many headwinds from the captain. Andrew Moran, thanks very much.
Thank you for having me.
And that's all we have time for on this week's edition of Liberty Nation Radio, heard coast to coast on the Radio America Network. I've been your host, Mark Angelides. I'd like to thank our guests today, Graham J. Noble and Andrew Moran. And of course, thank you, the listeners at home, for taking the time each and every week to tune in. Please remember, Liberty Nation does not endorse candidates' campaigns or legislation, and this presentation is no endorsement. Thanks for being here.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.